Hey everybody, welcome to the Multifamily Legacy Podcast. I'm your host, Corey Peterson, and today we've got another ringer. This is going to be a great episode. This is the start of a series that I'm going to highlight a lot of my staff, the people that actually do the work, that drive the machine, that leads to excellence. And so I'm going to start with what I think is probably one of the most important pieces that you've got to have in your company, and that is accounting. Accounting is one of those things that it never sleeps. It is always on, and it's always doing something. And you've got to have the right person, the right individual to drive that thing. So you're not going to want to miss this episode, guys. It is going to be a game changer. All right, before we get started, though, a word from our sponsors.
Hey, this is Shelly Peterson, Corey's better half. My husband shares amazing stories of the good, bad, and ugly of apartment investing. And while many of you want to do this yourselves, we have found that a lot of you would like to invest alongside with us. If that is you, I want to invite you to get on a short webinar where we discuss our deal room and how you can be a part of our private investor club. Go to kahunainvestments.com/webinar and register now. You won't be disappointed. Again, go to kahunainvestments.com/webinar, and we look forward to sharing our private deal room with you.
All right, we're back. So I've got Devonne West. Devonne has got such a wealth of knowledge. She's been in accounting for a very long time. I'm gonna let her introduce and give her background. But Devonne, welcome to the show.
Thanks, Corey. Great to be here.
Awesome. So just to give everybody a little bit of background about who you are and what you've done, just to tell everybody a little bit about who Devonne is and Devonne's experience.
Well, I've done accounting for large companies and small companies for 25 plus years. We don't want to say too much there, Corey. But I've worked for small companies, small entrepreneur businesses in the fast food industry. I've worked for one of Berkshire Hathaway's companies. It's probably page 10 of his assets, but I worked for them for several years. And then back in 2014, I got my first taste of doing accounting with real estate, and I love it. It's fun. It's not the same thing each and every day. It's just a blast to do.
Yeah, it's like the sleuth in you comes out. Let me find some of the mistake or it's like a mousetrap. I feel like I watch you do it, and it's amazing. So we came onto our company as a controller. We actually hired you away from a larger company, and you probably came kicking and screaming. I don't think you understood what you're coming into, but I got to tell you, first of all, I just want to give you some accolades on the air for this show, is that you've just done an amazing job. I mean, you've taken, and so if I can just give a background, when Devonne came into my company, I'm just going to say I'm a serial entrepreneur, and I'm an entrepreneur in the very classical sense that Corey is a thinker and a dreamer. He's a visionary. And so most visionaries, their detail or attention to detail is at the end of the scale, end of the spectrum. And so that's exactly, in other words, my financial house was a disaster when it came to my bookkeeping. So I got to tell you, it was very hard to open up and share that. And but Devonne came in and said, wow. First, I think she said, wow. What did you say? You're like, okay.
I was like, goodness, okay. So you and I had several conversations in the beginning, and it was like when you flew me out to your home and graciously entertained Daryl and I, you said, okay, this is what I'm going to be doing. And so you kind of laid ground what you expect me to do. And then so when I got in, it was like, goodness, okay. So it was actually a challenge, and I'm up for a challenge, but it was great. It was, not only was I able to help you, but I was able to understand what you were trying to accomplish, and told you what was the right way, what was the wrong way. And it's been a great journey so far.
Well, and this is what I believe too. A really good controller is going to, like, most entrepreneurs are flying by the seat of their pants. What they need someone is to ground them a little bit. And I actually give you permission to ground me. Like, I don't know it all, and I'm going to listen. I sometimes kick and scream, but this is where Devonne holds me to the fire. It's like, listen, damn it, this is the way it's got to be, right? Because this is the way. This is a gap accounting. This is how it needs to be done. And so you start thinking about those things. And as I look back, Devonne, as I know I've looked back, I was like, gosh, the place we're at today is so radically different than the place we were at when we started.
Yes, I agree with that.
So for anybody listening, okay, controller. Now, I think you may need to be a certain size to have a controller, but maybe not. But you got to have someone that's good at accounting. But let's just talk about kind of what the high level functions of what you do.
Right. What I do is, in a perfect world, you have people underneath you actually doing the work, and we're getting there, Corey, and I thank you for that. But I don't much get into the weeds unless I need to. And my people that are under me, they come to me with their questions. What should we do in this case, and what's this case? But there are certain rules that are just black and white. So again, I review the financials for accuracy, make certain expenses are in the appropriate period that they need to be, what needs to be accrued, and things like that. I'm making certain that our accountants are doing the accounting per GAAP, and that we would pass an audit internally or externally. So, that's the goal. Is ultimately, no one wants to go through an audit, but we have our books so that I can say with pride that every audit that I've been involved in has passed. So that was all my accounting career. Every internal audit and external audit that happened, we passed.
And that comes with a lot of little things too. So you don't think about these things as you guys as we're in business, but then, it could be as simple as, okay, well, we have these credit cards, right? Swipe, 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 right? Well, how do they get coded? Where's the receipts, right? One of the biggest things that you got me to do, which is I've been horrible at this, was the receipt. I called Devonne the receipt Nazi, right? And I'm like, Devonne's. I'm like, no, she's going to ask for him. I'm like, gosh, bless. And she would, and she wouldn't just ask, she would demand, and be like, and it wasn't just, she wouldn't just let me off the hook, right? She'd be like, damn it, Corey, you need to get, like, you said it from love, but you're like, Corey, if we're audited, damn it, we got to have this, we got to have the backup.
Yes, absolutely. And ultimately, that is the bottom line about why we do things the way we are. That's the foundation. And if the foundation is shaky, then everything after that is shaky. So, we have investors that we have to answer to, and they deserve to have accurate books.
Right. One of the neat challenges that I've seen sometimes, like when we first came over, we were managing third-party management companies, and so we're having to deal with their account, right? And so I think that was so here those accountants are doing the job, and they're sending you books, and now you're looking at them. Let's talk about some of the errors or things that common mistakes that you see a lot of.
So one thing, I'll give you a few here. I have seen where the accountants have put expenses, and for people that are accountants, this seems like a no-brainer, but I don't know why errors like this happen, but, we suspect, but, but anyway, some of theirs, they would code it below the line, things that are actually, when I say below the line, below net income, net operating income, they'll put it below that. Now, sometimes they do that intentionally. Sometimes they don't. I've worked for a company before where the the general manager of the restaurants were given bonuses based on what their NOI was. So they would put their monthly phone expense, if it was over budget, they would put it down in CapEx. so that they could make their budget. Anything that was over the budget, they would tend to try to drop it down below the line so they could get their bonus. But, I have a phrase, Devonne, don't play. So, so we would put it back up there. I've also seen them put things directly to the balance sheet. And phone is a good example. They put the monthly phone expense right to the telephone or a fixed asset on the balance sheet. And that is an expense. And that needs to be part of your P&L.
Right.
So, things like that are big issues that I just...
Yeah. Well, and I think what I really see too is, or even classifications, right? So expenses in the wrong spots, right? So, we had, I'm trying to think of like the contra, the insurance billing, right? There's a place where, so usually a lot of times your third party management companies are billing for insurance, and they're actually making a couple bucks off of it. They'll give you a couple of dollars too, but they'll have a revenue side where they collect it and a contra side, and watching all that stuff match. And sometimes you're like, wait a second, you billed us for this, but you didn't collect what you billed for.
Right.
And so now we have an expense to the ledger, to our property that shouldn't be there. It's only what you collect.
Correct. That's a perfect example of why some ownership groups want to put, and I'll use that as an example, or they'll put a bad debt versus bad debt recovery in the same GL account. Now, it really doesn't have an impact to your bottom line because, yes, it does reduce, but you can, by keeping your expense and your reimbursement for bad debt, for example, when you keep those separate, you're able to judge and rate the success of the collection company that you're using. How much are you actually writing off versus how much are you collecting? When it's combined together, you don't really have the foundational number of what actually was written off.
Right. And so these are all, like, I feel like combination wise, these are a bunch of all little things, but sometimes it can be large things, large items. I've seen large items in the wrong spots. How do they get that way? Like, where does these charges start and go wrong in the very beginning? What do you think it is?
Well, there could be several reasons why this could be. You might have a manager that has spent without getting the approval, before the expense incurred. So they might be over budget, and here's another thing.
Or even trained, right? I've seen that as a big one too for us. What is do the managers, because a lot of times I feel like these managers get hired, but they never get trained on how to do AP.
Right. And part of this is you can't really fault them. From our perspective, we are a support for our properties out there. They're out there making the money. And without that money, we are not in business. So part of this is a training tool. And, I had a past boss say, it's either training or aptitude or attitude. You can train and teach aptitude, but you can't teach attitude. So, and my philosophy has always been give them a teaching moment. And most people with the right attitude will take that and say, I've learned something today. My dad used to always say, it's not a wasted day if you've learned something. And this is the most property managers that we have, they're appreciative to learn these kind of details. It's been great.
Well, I think even before we've taken them over when they're a third party, they're not even our employees. And that's when really, I feel like even more mistakes happen. We've gotten way better when we've taken over because we've given all our managers a chart of accounts. We coach them and teach them. But on the other side of that equation, when it's third party management, like they just have this process. And a lot of times AP is done, they kind of sub it out. I want to say sometimes they'll even sub that piece out to somewhere in the middle of whatever country you want to call it.
Yeah, but I don't hold them blameless on that either. You can do whatever you want with their business if they're going to hire it out, but you should still have accountants
checks and balances,
reviewing that.
Yes, checks and balances.
And first of all, I think this is one detail that many companies are lax on. They don't have a written policy for their CapEx.
Yeah.
And if you don't understand what qualifies as a capital expenditure, how can you expect your property managers to get it right?
Right. Yes. Understand what is CapEx, what is not, how, and is it part of a big overall budget for CapEx, or is it just, because normally what were we thinking? I think it was door hinges or something like that, a door. New doorknobs that had the locks on them. Yeah.
So, typically, when you think about that, one of those would cost $125. And that by itself would not be a capital expenditure. It's not worth putting below the line. But when you think, if you're doing an entire project of replacing all those locks on the entire property, yes, then that becomes a capital expenditure.
Yeah, it's a $30,000 job, but we're going to do it phases at a time.
Exactly.
And so you're like, okay, no, that is part of our CapEx plan. That does go below the line, right?
Yeah. And there's another detail too that, most of our loans will have replacement reserve escrows that the lender requires a portion each month to be paid to keep the property in good condition. So you have to submit that draw back to the lender. So in order to be time efficient, I'll use garbage disposals. Those are under $100 each purchase, So, but that is considered on most loans that I've seen, that is considered a replaceable item as far as the escrow. So we here at Kahuna Management, we make certain that all of our items that apply to a replacement reserve draw, we automatically code those to CapEx, because that makes the draw time, you're spending less time reviewing your GL to see what needs to be. It's all in that CapEx section.
Right. It really is, because every lender is a little different on that too. So it's kind of crazy.
Hey, would you like to learn more about Kahuna Investments in our deal room? Let's do virtual coffee. Book a 15-minute call with us so we can learn more about your investment goals and how Kahuna Investments can help. Go to kahunainvestments.com/coffee to book your call today. Again, that's kahunainvestments.com/coffee. Let's have some virtual coffee and get to know one another.
Now, the other part is you're working, a good controller is going to work hand in hand with either your third-party management accountants, or if we'll talk about our vertical integration here in a minute, but that piece of that, how does that work? How does that ebb and flow?
So let's just say we're taking two properties over, and from a third party, the property management company. So there's definitely got to be communications, first off, internally between operations and accounting.
Before we even get to the takeover part of it, right? Just okay, we just buy a property, we put it in third-party management. Mm-hmm. What does that look like from the controllers, from our perspective for Kahuna Investments, working with the accountants that are going to be handling stuff?
Yes. Well, okay, we certainly make certain we want them to use our chart of accounts, whether you're putting it into your system or not, your own system or not. We want them to use our chart of accounts, because we want that income statement to look the same to our investors. And we have certain categories, payroll and benefits. We have the R&M section. We have contracts. And part of that is just making them understand. Here's a detail that you have to convey to the third-party management company. What constitutes, and also to the properties, what constitutes a contract? From a property management perspective or a property manager perspective, they say, oh yeah, I contracted with XYZ Electric to come out and fix our this. Well, they look at that as that's a contract that they made. From an accounting perspective, we have a section for our regularly scheduled contract expenses. That's the items that we want put there so that you know, okay, this is a regular occurring expense, quarterly, monthly.
It could be like
year.
landscaping.
Yeah.
Is one of those contracts, like it's going to be recurring. It's not like, oh, we had a plumbing issue, so we got a contract with a plumber to do this one job. That's not really contract services.
Right. And so that would be considered as like R&M, the difference between R&M. Yes, those contract expenses normally are considered repair and maintenance, but again, we keep them separate so we can monitor first to make our income statement so at a glance we know we're missing. The thing that I have very little patience for is when a property management company or the property manager themselves have a stack of invoices on their desk dating last year that your accountants would never even know happened because they're only looking at it from an accounting perspective, which is why kudos to you, Corey. He's got the plan of bringing all of those invoices in-house and let our home office be the hub. So again, it's still routed to the property manager and gotten the approvals that's needed. But this way we know all vendors know that they need to send the bills to us.
This is a big issue, right? So this is one of those things that as you start managing properties, you'll start seeing the cracks, right? The cracks in the business. And as much as you want to, there's a human element that you can't control. And you hire these property managers. You want to think that all property managers are the same and they're good. But we also use this thing called predictive index. And so I'll give you an example. A property manager has to have a lot more modality. They got to be a leader of people. They've got to be able to, understand they have different strengths and weaknesses, right? And a lot of times we try to hire them with a higher level of degree what we'll call accuracy. In other words, they like to get the details right. But if we're going to err, we'd err on sales because we're in a sales position at the property site level. So is that person that is the property manager that's more team focused and people focused and more sales focused going to be as good as someone that works in the office 24/7 that could be all by themselves and loves detailed work and loves being highly accurate 99% of the time? That person is going to be way more positioned to do it right each and every time than a manager that all of a sudden, oh, my day got away. I had these bills come in, but I didn't even send them. I didn't even enter into the system, which happens more often than we'd like to admit. Right, Devonne?
Yes. And even in our processes where we send out our prelim financials to our property manager in the regional, we say, are there any expenses that are not on the books that we need to accrue? And if they're in a rush, I've had property managers say, nope, there's nothing here. And nothing to see over here.
Yeah,
and
nothing.
And then 2 or 3 months down the road, here we get this. And that becomes a serious issue, especially all you accountants out there when you cross over into the new year.
Right. So then let's also talk about, so you brought in a good segue, is year end, right? Year end for accounting people is like the Super Bowl and World Soccer Cup and probably about 4 other events rolled into one. Because that's what I think it feels like. It's crazy. It's way more work than most people would even understand.
Right.
Help us unpack a little bit of what goes on during end of the year to tax time.
Yeah. Oh my goodness. Where to start? There's so many different areas of, and you can't really say that one is more important than the other. First off, you have to issue the 1099. W-2s have to be issued to employees. And part of that is, let me talk about the 1099 issues first. if you're setting up those vendors correctly at the very onset, it's going to make your job easier at year end, because then you're not going to have to go through and say, oh, is this considered taxable earnings for that vendor or not? That's why it's so important to have that W-9 on file. And most good accounting departments will require a W-9 before they even set the property. Set the vendor up.
Yep. And send a check or do anything like that. There's no way they're going to go check unless we've got that done.
Yes. And, it's funny how it works, because vendors, if they understand they're not going to get paid until they send that W-9, they're pretty quick to get that.
Magic. It's magic.
Yes. It's amazing. And then, from our perspective, then we also have to prepare and get our financials finalized as quickly as possible so that our CPAs can start to work preparing the K-1s for our investors.
Yeah. So the challenge, okay, so you've got payroll or W-2s, 1099s, that comes right out of the gate. Then you're trying to finalize end of month for this is, you're doing it in January, but it's for the end of the year. It's not just even end of the month. It's end of the month and end of year, which is like we got to make sure everything balances out. Even that's been out there kind of waiting. Now it's got to get finalized and like, what are we doing with this thing, right? Whatever, if there's anything outstanding that we need to clean up. And then there's a whole cleanup. And then we got to give it to our CPA. Now they start doing stuff. And then here comes the issues. Oh my God, I didn't fill out my paperwork right. Oh my God, these are from your investors, right? I was supposed to be an LLC. Oh, I sent that money in my personal, but I can only name. So it's funny because this year, this coming next year, we're going to start sending notices in like November, December, saying, please check, make sure that all your stuff is right, because it's so disruptive as we're in the middle of stuff. And then you go back to your CPA, up, different. We had to change. We had to correct this. We had to correct that. And then they have to correct it. And we've had to modify returns after the fact sometimes, right? Yeah. Not all the time, but sometimes. And so now our CPAs are good CPAs in that they understand they don't ever file anything until it's done. Their job is just to get the 1099s out, but they're not going to file, the K1s out, but they're not going to actually close and file till usually way after, somewhere in the summertime. Because they understand that things happen and can change the return.
Yeah. Yes.
What else? I know I'm missing a lot more in that, but I feel like it's a fire hose that accounting people drink, and they do it every year. It's the same.
It's you pretty much.
You guys are pretty special, by the way.
And what? Thank you, Corey. Thank you. January, you pretty much don't book anything. Even my daughter, I said, okay, you cannot get pregnant and have a baby due in January. That's just. But anyway, it's a lot of fun. I love the pressure. Wouldn't want to do it 12 months of the year, but yes, you do see the results of hard work.
But this is the magic of what you do. And this is like, for the first year for us, it was a crazy Wild West. And then this next year was a lot easier. And then it's getting better and better. We're getting more cleaner, more efficient, more organized. And we're eliminating a lot of the little things that had come up in the beginning, right?
Yes. Yeah. Yeah.
But it's still a puzzle that you solve every year.
Exactly. It's I don't like jigsaw puzzles, but I love these kind of puzzles.
Right. And so everybody that's listening, if you're watching this on YouTube, you see Devonne's, how she gets giddy when this is, and that's when that's the right person, by the way. Accounting people love it. Like, for me, that doesn't excite me at all. Watching Devonne get excited excites me. Right?
Yeah.
And so the right people, when you put them in the right place, doing the right thing, and then you can tell Devonne's passionate about this. She loves it, right? You've been doing it for a long time, and you've done it at a very, very high level, right?
Yeah.
And I kind of want to ask kind of more of a personal question, but because I feel like, so Corey's the dark side, right? We kind of talk about she came to the dark side. She's always worked for more corporate America, right? And then I convinced her, I'm not sure how I did it, she goes, I remember she's like, I want to finish my career on the dark side. And I don't think she understood what she agreed to do. But I will tell you this. I told her this. We talked about this. It's like, when you're done here, it won't just be a mark. It'll be an exclamation point, like 5 of them in a row, right? It's that piece. When there's people come into your life and your business that doesn't just do like 1 + 1 = 2. It's 1 + 1 = 25. And so, in my opinion, that's what Devonne's done for our company, is that she took into our chaos, the chaos that I had created, and she created calm around it and said, okay, and she did it in chunks. I'll just watch you work, Devonne. You're like, okay, I'm going to get this done. Boom. All right. Got that done. Win. Right. I could tell, like, okay, got that win. And she's like, and then all of a sudden you're like, oh, I just jumped in this other hornet's nest. God damn. Corey, what am I doing? Right.
Oh, it's been fun. Even when you thought the light at the end of the tunnel was never going to come, and then you see the light in the tunnel, and we see it's a train coming at us. But it really has been just a joy. When you clean up something, and I know we accountants speak a different. We're a strange group, but people that are accounting people, they understand this. It's just, I tell our accountants, it's like wrapping up the present and putting the pretty bow on, and it's finishing it, and it looks beautiful. I mean, some people just don't get when I say these are beautiful financials,
Right, right. But that's it, and that really brings you joy, especially when you get it right, and the team is working in cohesiveness. And so, what I believe is when this matches, when it comes together, because here's what, just to kind of understand what Devonne said. So we cleaned all this stuff up, or we've still been cleaning, like it's way better. But then there was a time, this was about 7 months ago. So and we'll use this to kind of wrap up because we're getting towards the end, but we were having issues with a third-party management company. And I just knew, I'm like, gosh, guys, we got to make a change because our expenses were way out of control, and our AP, accounts payable, way out of control. It
wouldn't pay our bills. Oh my goodness.
Horrible. It was so bad. Right. And I looked at Candy. We're going to interview her probably next. She'll be on the next show, which is the region, our COO of the management side of the regional people, and Devonne. So I was like, I went to those two. Those are my two pillars. Those two women are my pillars. And I was like, ladies, I got a proposal. And I said, I think we need to create a management company. And I pretty much asked them if they're in. Now, Devonne's like a team of one. And I was like, and she's like, oh, Lord, are you trying to break me? At least that's how I remember. How do you remember, Devonne?
I do. There was that serious moment of trepidation where it's like, oh, goodness, how in the world is this going to do? I mean, because you're opening up another entire realm that needs to be monitored. But, the other side of me was like, I've seen what the third-party management company is doing with our accounting.
Yeah.
We can do better than this. Let's do it.
Yeah.
I'm in.
Yeah. And that's what I got from both of them. They both looked at us. And when we said we're in, we all three knew what that, well, maybe not. We knew it was going to be work. I don't think we all knew as much work as it was going to be. It was a lot of work. It was a lot of work. And honestly, Devonne, you've done so much of a lift that is unbelievable. But we are coming through this thing almost. We're getting ready to get a couple more staff, and I look back at that, and that decision that we all three made together, and that is our exclamation point, I think, right? Of saying there's nothing better than having a couple people that you can really count on. Because it was an emotional journey for all of us.
Well, look what we've accomplished. And today we're going live on two other properties that we've migrated in. And that one came over a whole lot more quicker and smoother than those first ones that we brought in.
Yeah.
Goodness, that took.
Yeah, it was horrible, right?
Yeah. And,
a lot of work.
This one, we're in and out in 2 or 3 days.
You guys told me, you're like, hey, we're back live. As what?
Yeah.
Or what?
Corey, you say something all the time. One of our principles is make things more better. We are certainly doing that every day when we come to work. It just seems like, okay, what can I touch today to make Kahuna better than it was yesterday? Uh-huh. And ultimately, that's really what we do in our entire personal life too, or should be doing. We're just trying to improve.
Amen. On that note, man, let's wrap it up. Devonne, I want to thank you so much for taking some of your precious time to come on this podcast and share a glimpse of a day in the life of what the controller does. For any books that you've been reading that you'd love to share with anybody with the audience that you think will have a profound impact?
Well, I do like self-improvement books. Right now I'm reading Jordan Peterson's book, the 12 Rules for Life, an Anecdote for Chaos. I love him. I love listening to him, and on the fiction side, I like Fredrik Backman. There was a recent movie made. It was an international movie, A Man Called Ove, and then I think the American people, Hollywood, made a new one, but I can't remember what its name. I haven't seen that one with Tom Hanks, but Fredrik Backman's got some great fiction books.
Awesome. And what advice would you give to anybody that's new or entrepreneurish, that's kind of looking to get in this business, or just anything that you've got a strong work ethic? What would you say to them?
Well, if you have the desire to do it, I just say surround yourself around people that will support you and help you achieve the goal that you want. I consider it just a sign from Providence that, Corey and I got to, meet each other. And, I'm a firm believer that the Lord puts people in your path to help you, and, that we can help each other. And I feel that it's been certainly a wonderful relationship.
Yeah, it's been a great two-way street. We've learned a lot from you, more than you probably know, but it is a great relationship, and I've cherished it, and I will always cherish it because I think that there's marks all over my company that have your name on it, right?
Well, thank you, Corey. Thank you.
With that said, guys, this is why you want to listen to this podcast. No other podcast that I know of that does this, that shares the insides of the company and the people, the staff, the culture, how it works, the realness of it. Devonne said, surround yourself with people of like-minded that will help bring you and cultivate you. And she couldn't be more true. Like success doesn't happen by chance, guys. It starts with a dream and a vision, but it's cultivated by a team and nurtured by the right people. And if you let the wrong people into your life, they'll crush that dream. But if you bring the right people around you, they'll lift it up and they'll champion it. They'll help you succeed. And even when you fail and you get knocked out a little bit, they'll build you back up and say, that was maybe the wrong way. So try this door. Look at it this way. But they won't deter you, and they'll keep saying, yes, you can. Yes, you can. Keep fighting for your dream, guys. I'm telling you, if you believe it, you can achieve it, and your paradise is absolutely possible.